Hello, my name is John Boyle. I'm Director of Research at Retty & Co. Just going to share a brief presentation on how the housing market has been performing in Scotland over recent months, and then trying to look ahead maybe as to the impacts, longer term impacts that COVID might be having on the market. So the focus here is very much on housing market outcomes. And we're going to look at the sales market. We're also going to look at what it's done to government revenues that are related to housing market transactions. We'll have a review of the lettings market or rental market, and then future outlook, including market forecasts. First of all, on the sales market, I think as we correctly anticipated before lockdown began, house prices have stabilised. They didn't plunge as some people were forecasting. House prices will tend to be robust and resilient unless there is a sharp rise in distressed sales. And while we're still in an environment with very low interest rates and where banks are not rushing to repossession, and schemes like furlough have kept people's heads above water, then we haven't had that influx of distressed sales into the market. So house prices have held up. In fact, in most areas of the country, they've been rising. And we can notice that the sharpest growth, and we'll see this in one of the latest slides, is actually now in the hinterland areas. So it's in the likes of East Renfrewshire and East Lothian, and with a post-COVID world where people may be able to not have to commute in considerable distances into work each day and may like a rural or a semi-rural environment, then these kind of attractive hinterland areas could see further price growth going forward. Transactions, though, have been hit. We had no market really for a good chunk of the spring. 2020 had actually started off very similar to 2019. The market usually follows this kind of seasonal pattern that we saw in 2019, but 2020 it's a very different pattern. The market is only, by the time we get to September, which is the latest sales data we have available, it is only just getting back to 2019 levels now, and this is a 35% reduction in sales over the registered sales over the calendar year, January to September. We would expect that there'll be recovery in the latter months of the year, but the market is still likely to be 20 to 25% down in terms of sales activity. And we can look at market turnover, which is probably the best benchmark. It considers the total value of property sold in the market, and this gives a kind of a potted recent history of the performance of the Scottish housing market, looking at this key metric. So, we can see here, as we were moving towards 2007, the market was rising very sharply in terms of transaction and house price growth. So annual increases of 20-25% was quite common. Then we got the market crash. So this is the global financial crisis. The market lost around about 2/3 of its value in an 18-month period. We had a bit of a dead cat bounce here by the time of the UK general election in 2010. The reason that we had a peak here was that this trough here was very low, but then the market was relatively stagnant for the next couple of years. We still had the fallout from the financial crisis to contend with, and Help to Buy coming in mid to late 2013, gave the market a bit of a fill-up. First-time buyers came back into the market. We saw a rise in activity levels, but then we've had a market that's really been dominated by political events, subdued economic growth as well. But it has stayed positive despite all of this uncertainty until 2020, when COVID-19 caused an even sharper correction than we got in 2008-9. But then we have bounced back very quickly again, I think, as anticipated, but still over 2020 as a whole, a considerable drop in activity levels. One of the things that we've been noticing over the last couple of years is demand pressures now seem to be greatest in the kind of the more remote areas. So although average house prices in rural towns and remote rural areas are still below what you would get in urban areas, they've been growing faster over the last year or so. Also accessible rural areas have also been growing sharper than urban areas. So, you know, even before COVID really hit, we had this kind of drifting of people to the kind of hinterland areas and other rural areas where they may be able to get a better balance between lifestyle and still ability to commute in. And of course now, you know, the commute in, at least the commute in 5 days a week, may not be required to the same extent. LBTT returns are well down on the financial year. Again, we can compare 2019, which is the kind of the blue line here, with 2020, and again you can see that the shutdown in the market in the spring months, recovery from midsummer. But as with the sales market, we remained well down on where we expected to be in the forecast, and it was about 28% down compared to 2019 in terms of the cumulative value of residential LBTT revenue. So government revenues are also going to be taking a hit, and again, it's hard to see by the time we get to the end of the financial year why this number will, you know, recover to get back to previous year's levels or forecast levels. The lending landscape has also changed over the last 15 years. If we look at mortgage approvals for house purchase, which is the red line, and remortgaging, which is the blue line, again, these numbers plummeted from 2007 when the financial crisis really hit, and then they stabilised before kind of gently rising over the last few years. And again, you can just see the COVID effect there, sharp reduction again in lending activity in the spring months, but then we've also experienced a very sharp rebound, particularly in house purchases. And again, we can see one of the effects of the pandemic is that banks have reduced their loan to value. So there are very few banks now offering more than 85% loan to value, and also the mortgage rates that they are providing on these products has also sharply increased as a result of the pandemic, and this has had an impact on certain market segments, notably first-time buyers. The lettings market, again, looking at rent levels as a kind of key barometer, we can see there was a bit of a blip really here of around 2008-9 when rents dropped back, but the This is advertised rents, of course, not actual rents, and it's from the City Lets portal, but we can see just the kind of the gradually rising rents in Scotland and the main cities, with the exception of Aberdeen, which has gone the other way in recent years because of the oil price crash. But Edinburgh has been accelerating over the last few years, and Glasgow is now also growing ahead of the Scottish national average. So we've had a demand, supply and balance really within the rental market, which has been one of the drivers behind rental growth. And it's interesting just to look at the differences between Glasgow and Edinburgh during the pandemic. So there's been a year-on-year reduction in rental supply in Glasgow as a consequence of the pandemic. So the same market churn isn't happening as we would normally expect, and average rents in Glasgow have actually gone up 4.5% this year as a result. Whereas in Edinburgh, we've had an 11% increase in rental supply coming onto the market, which has helped to stabilise rental levels in 2020. And a lot of this is short-term let property coming back into the traditional rental sector, given that one of the effects of the pandemic was to almost completely kill off the Edinburgh tourist industry for the time being. And we can see this just by looking at short-term rental listings in Edinburgh and the trend that it's had in recent years. And there's around about 14,000 at the peak of the short-term lets, about 14,000 rooms to let for short-term in the Edinburgh market, but that is now reduced quite sharply this year. And given regulation, or further regulation is likely to occur in this market, then although there might be expected to be some recovery here, I think we've already passed the peak of short-term rents. Build to rent has been on the rise in Scotland in recent years. It might be coming of age now in a kind of a post-pandemic world where people look for better quality property, but also communal space and ability to live and work in apartments that are supported by institutional investors. And the pipeline now has risen to around 10,000 units in Scotland. Glasgow leading the way with well over 5,000, then Edinburgh with over 3,000. And of the BTR stock that we manage, occupancy rates have stayed high throughout the year, as has rent collection. And again, this is particularly attractive to institutional investors who are now looking at the residential sector quite seriously as a way of providing more reliable returns over the next few decades. In terms of looking ahead, our house price forecasts have been relatively accurate over the last 10 years or so that we've been doing them, and our forecast for the next 5 years is house price growth of around about 11%, which is comparable really to the previous 5 years, and is subdued really by historical standards. And on the sales transactions, I think there'll certainly be a hit this year that will probably continue into next year as the housing market regathers itself and probably economic recessionary conditions continue to affect us. In line with the Bank of England's economic forecast, we're expecting recovery after 21, but probably not getting back to 2019 activity levels till around 2023, and on the pessimistic forecast, which would be a much more severe economic recession, is certainly much longer out than that before we get back to pre-pandemic levels. So in conclusion, just some of the kind of key takeaways, I suppose, from this presentation. Sales markets rebounded sharply, supply often 50 to 100% above 2019 levels during the summer and autumn months, but overall sales is still likely to be down 20% for the year as a whole. LBTT revenue is also down 28% on the calendar year to date. That'll narrow by the time we get to the end of the year, but there's still going to be a bit of a hole on government finances. Rents have remained robust. Supply has really rebounded back in Edinburgh. Short-term lets have moved back into the long-term market. The build-to-rent sector has shown itself to perform robustly during the lockdown, and continued investment in a rising pipeline during 2020 and beyond as expected. House prices, we think, will grow modestly up to 2024, but the main hit of all of this is likely to be again in transactions, which are expected to be down this year and next, and not really recovering to 2019 levels until 2023. And that's it for me. Thank you.